Hi everybody. Welcome today. Thank you for joining us. My name's Ida Rademacher, and I'm the executive director here at the Aspen Institute. And it's my pleasure to have you join us this afternoon for a session we've been looking forward to for quite some time, equity, investment, and strategies to expand market participation. It's been my pleasure and that of my whole team at Aspen to partner with close colleagues at Commonwealth to spend the last few months diving into this topic and producing both the report and this event today, both aimed at taking meaningful steps to open up capital market participation to all Americans, and especially to women of color. Today, we are able to bring this event to you, and the additional part of what made it possible is the collaboration and partnership with the NASDAQ Foundation. So thank you very much, and I'll be talking in just a minute with the NASDAQ Foundation President, Jalen Griffin. So we'll bring her on in just a minute. This entire set of work is part of an emerging portfolio at the Aspen Institute on the future of wealth and ownership. Wealth creation takes many forms, but significant wealth generation often requires participation in capital markets. And the lower market participation rates by women of color is largely overlooked in the toolbox for addressing economic inequality. We think the potential for broader participation has not received the attention often given to other strategies for wealth creation. And it's often somewhat not really embraced by some of the folks who lead the gatekeepers who shape public conversations about what tools are suitable to address the wealth gap. As the report shows and talks about, the notion that some corners of our economy aren't suitable really isn't tenable anymore, especially after the last year. We know the data reveals clear interest in the market engagement, and we think that it's really just an opportunity to truly think together about what inhibits market participation, how do you democratize it, how do you de-risk it, and that's really where our conversation will go today. The report itself, which you all got as you're part of registering here, is, I think, really breaks some new ground in important ways. It emphasizes the importance of participation in capital markets to all Americans. It looks at today's market participation gaps by race, by ethnicity, by gender. It looks at the intersectionality of these issues for women of color. And it also looks at the significant role of racial social disruptions in shaping the current environment. And as Tim is going to talk about more with the panel in just a minute, the report really identifies 4 distinct barriers to opening up the market participation: resources, accessible knowledge, accessible market products and processes, and investor identity. And it includes with a real analytical framework, which I think was missing, and Commonwealth's done a fantastic job putting this forward, that articulates how the nation's public, private, and social sectors really can play a role in pursuing actions that narrow the nation's wealth gaps. Before I turn the conversation over to Tim to lead with a fantastic panel, I want to invite Jalen Griffin to come on. Jalen is the president of the NASDAQ Foundation, and it's been a pleasure to work with her over the course of getting this all ready to go into the public domain. So hi, Jalen, thanks for joining.
Hi, thank you for having me.
I just want to spend a few minutes with you. I want to thank you because this opportunity was an important one, and we were so excited about the opportunity to collaborate both with Commonwealth and to you all. NASDAQ came to this decision to have a specific focus on this issue and an interest in doing research. I'm wondering kind of where you see this issue of unequal access to equity and investment opportunities. Like where is NASDAQ's evolving position on these issues?
So when you think about it, when they work well, the capital markets can be a really powerful vehicle for democratizing wealth creation. But as is evident today, unequal access to the markets is really deepening the divide between the haves and the have-nots. And the data in this report, I think, really highlights that challenge, where you think, while 65% of white households report owning stock, that compares to only 41% of Black and 28% of Latinx households that do the same. And these disparities really clearly reflect real-world dynamics. So one of the things that we were really pleased to see that is reinforced in the report is that if we can make the markets work more for the benefit of more people in society, then we really can advance inclusion and close the wealth gaps. And for me, that matters really personally because thinking of the NASDAQ Foundation, it really helps bolster the mission of the foundation and the impact that we have, or the potential we can have to do more in this area.
Yeah. So the decision to start with research, funding this work, is there more to say about why it's important specifically that NASDAQ is coming into this space? I mean, in my mind, I can say, I think it's important because the broader we often say, the broader the unusual Thanksgiving table of guests are that are starting to have the same conversation about what is the toolbox to create a more inclusive, equitable future of wealth. Where is NASDAQ in terms of why fund this work, and where do you see the foundation going from here?
So, I mean, improving their understanding of the realities faced by those that are excluded from the financial markets, I think is really key to tackling the issue and working towards a solution. And when we relaunched the foundation last year, we did it with a commitment to build deeper data-led understanding of where the challenges are greatest, what existing efforts are out there that we can amplify, and then where the opportunities are for the foundation's programs to drive to have the most impact. So thinking through funding this report, for me, the report delivers great insights into the challenges faced. So then it really helps inform kind of what are the opportunities there are to make the markets more accessible, and how does that in turn hopefully narrow America's long-standing wealth gap. So I think the work that you and Tim and the team at Commonwealth have done has been tremendous on this topic, and it's kind of an area where we're excited to fund because we're excited to see how we can then help make an impact from the foundation's perspective going forward.
Yeah, I do think that a conversation like today and a report like the one that got released yesterday, I think it's important at this moment in time. When we put out a financial security framework last year, and we talk about routinely positive cash flow, and this will get to some of the resource questions, we have to look at both labor and non-labor income, right? Income from earned wages, but also the fact that most people who have come out fine on the other end of the pandemic is because of the way that they also have market participation. When I look at the differences in wealth in low-income households, most of that equity is in home ownership for the most part in those low-income households, but we've seen that there are real racial gaps in terms of appreciation of that. It doesn't happen quite the same way in the market, or it shouldn't. And so this idea that market participation should be a go-to tool, I think is one that we need to embrace and kind of wrestle with as a community. And so I really want to thank you for giving all of us the opportunity to start having this conversation publicly and inviting the kind of leadership that we're going to hear from in the next part of today. So I'm going to close with that there with you and say thank you and turn it over to my colleague Tim Flacca, who is the founding CEO of Commonwealth. And for those of you who aren't already familiar with Commonwealth, they're one of our closest collaborators and co-conspirators, but really they're also, Tim, come on by, they're also just cutting edge in terms of the way that they're helping to think about the innovations in the policy and the product solutions that are going to be at hand to really create a more just, equitable, and inclusive wealth creation system in this country. So Tim, thanks again for the work and the partnership for this, and I'm going to turn it over to you for the rest of the panel.
Ida, thanks for that super warm introduction. And we have really, really enjoyed and appreciated the chance to work yet again with Aspen and the whole team there, and with NASDAQ, Jalen and her colleagues. So I just want to repeat, I'm incredibly excited about this conversation today. Really, for my organization, for Commonwealth, the idea of wealth, or we might say assets, has always been the centerpiece. And I imagine many of us, in this conversation today know this, but it just is really worth saying again that wealth is not just dollars and cents. Wealth is dignity. Wealth is options. Wealth is self-determination. Wealth is standing, in your community, in your family. Wealth is a proxy for so many things in our economy and in our society. And whether we agree with that or we disagree with that, I think it's honest to recognize it. And so, with that in mind, the disparities that have been alluded to, and I again imagine most of us realize by race, by gender, and especially by race and gender and income combined, are just outrageous. And as we think about that and sit with that, it really is important to push ourselves to think about new ideas, certainly, but also to say what's worked historically for real households and real families. And participation in capital markets is clearly on that list. And the second thing that just seems to really important to call out is that based on our experience in talking to real families, real people, there is something about participation in capital markets that is more than just what it is. In our country at this phase, the capital markets are sort of the beating heart of capitalism, and the ability to participate in them carries symbolic value in addition to material value. And so, again, especially excited to be able to unpack that. Let me, the real feature today is this incredible panel. So let's bring on the panel. Let's put up the slide, and let me just briefly introduce. I believe there's a hyperlink so that you can actually read in detail the bios, but we're joined today by Jateka Edie, who is the CEO and founder of Full Circle Strategies, by Andre Cherny, who is the CEO and co-founder of the FinTech Aspiration, by Treasurer Fiona Ma, who is the Treasurer for the state of California, and by Rita McLaughlin, who is the Director of Investor Education Community Outreach for the FINRA Investor Education Foundation. So please, you all have joined me, that's great. Just one more piece of me talking before we get to the conversation. As Ida so nicely previewed, we sort of humbly submit that we have a new framework to offer in this conversation. And I want to take a moment and just talk about that. Because the hope, when in the work that we do at Commonwealth, and perhaps Aspen will agree with this, we humbly hope we're contributing something that can be useful to a whole bunch of stakeholders. And so as we went out, and we have been doing this now for really 18 months, 24 months or so, in some form or another, as we go out and talk to families, these are the 4 categories of barriers that really surface over and over again. And this is intentional in the way they're laid out. Resources, which is maybe a big term for just making sure people have enough of what they need, enough income, enough resources, really is foundational. So we wanted to recognize that this needs to be in our minds as we ask the audacious question, how might we open up access and participation to capital markets? But then on top of that, we need to think about these 3 additional pieces. Actionable knowledge is a piece of what we hear from actual families that they crave and they need, and we'll unpack that. All of this doesn't work if you don't have access to tools and processes and systems that allow you to put your money to work. And so you can see the market access piece clearly in the middle. And the last piece, and this emerged again really from our work and talking with households, with individuals, with families, there is something about having an investor identity. And it's really important. There are 2 parts to this. This is not just what that phrase might conjure up. How do you see yourself? And whether or not you are the sort of person who can participate in capital markets. But how do the institutions around you see you? And are they prepared to recognize your interest and appetite to be an investor? So you can read more about that. I hope you will in the report. We'd love to hear from you about whether part of this or any part of this resonates for you. But we will be using that now as we transition into the conversation. So let's do it. I'd like to start, so often when we have conversations about opening up market participation, we get some version of the question, why should getting people into markets be on our agenda? Like, of all the things we could do for wealth building, why this particular one? What's the real opportunity here? Or maybe from those who lean skeptical, are there any cautionary notes? And so, Jateka, you have worked across sectors, in a number of different roles. And the through line that I've heard from you is really about empowering Black women. And now I know you lead your own firm, right, which is focused on social impact. I just would be interested from your perspective, why should we focus on opening up markets to everyone, and in particular to Black women? Can you offer your thoughts?
Absolutely. First of all, thank you to you, Tim, and for this powerful report, and NASDAQ and the Aspen Institute for convening this very important conversation. To answer your question, I think that it's quite simple, is that we as Black women, I certainly speak for myself, we know, and what we have seen is that participation in the marketplace has created an incredible amount of wealth for many people across many years. And what has been the truth, and I think it's evident in your report, if we have the opportunity and the access to participate, that Black women also want to participate in that marketplace as well, and have that same opportunity for wealth building as well. I think it's important for us to use every tool in our toolbox. But I think, as your report outlines, it is so very clear, is that we can't invest what it is that we do not have. And so the very foundation of that very important chart of looking at how do we actually expand the opportunity for Black women to have more resources to be able to participate in the marketplace. And yes, it's equally as important for that marketplace to be welcoming, and for the individuals to have the knowledge to actively and carefully participate in the marketplace. But there is a real opportunity there. And there has long been an opportunity, but what there has also existed has been not only has it been very the tools to protect market access and the resources, because they're adequate health to family. Now, for myself, I am caring for, because not only ourselves, but we care for our families.
All right, Joteka, I'm terrible. I feel awful, but I think we're having some connection issues. I was just trying to figure out if that was on my end. I think it may be for all of us. So why don't we take a pause? I think we're all interested to hear where you're headed, but maybe there's a chance to check your connection. And Rita, I'd like to come to you on this same question. When we chatted beforehand, one thing that I really took away was you said with real passion, it's just so important that women have agency. And I know that the FINRA Foundation has been really focused already on who is participating in capital markets. I think you have a conference coming up in the fall together with NORC that is specifically on this subject. And I just really am curious for your perspective on why this work matters. What is the opportunity here?
So, Tim, thank you for that question. And I also just would like to thank the Aspen Institute and Commonwealth and the NASDAQ Foundation for the research that's been done, and for putting on the table and bringing people together to talk about this important topic. I think it's important also for us to take a look at and to consider, from the point of view of what's going to continue to create a vibrant capital market. We know that that's access, that's operating fairly and efficiently, and we actually know that that will generate liquidity. In 2020, we saw a surge in the number of retail investors, or new retail investors, that entered the market using taxable accounts and non-retirement investment accounts via online platforms. And in some research that was done by the foundation in NORC at the University of Chicago that looked at a national representative sample of the US, found that the majority of new investors, in fact, were under the age of 45, had lower incomes, and had smaller balances in their taxable accounts. Also importantly, that when we look at this universe of new investors, they were more likely to be racially and ethnically diverse. And so and inside of that, also recognizing that 2 out of 3 moderate and low income women are interested in participating in the markets, but in fact, only 4 out of 10 actually do so. So that makes us, ask the question, well, why is that? Is it as the researchers pointed out, is it a question about belonging? What are the messages that investors are receiving? And that's and market participants. And of course, we have to look at, well, what's the actual raw material for investing? Is that income, that's earnings that actually allow for people to invest? And so when we look at, asking the question, when we ask the question, we end up winding up, with better information than we actually have before. And we know that, there are 2 requirements for any change to actually happen, and that is desire and willingness to have there be change. But first, we have to acknowledge what's effective, what's ineffective, and then also look at, are we willing to improve, and what could that look like? The pandemic, as I think we all know, has laid to bear that there are significant resource gaps in underserved communities, particularly with women of color being significantly hit in terms of being left out of leaving the workforce. And so the FINRA Foundation, to get to your question about the convening that we're planning for October of this year, October 22nd, is in partnership with NOREC at the University of Chicago, as well as the FINRA Office of the Chief Economist and the Foundation. We're looking to bring together university scholars, researchers, the industry, market professionals, regulatory policymakers, philanthropic leaders, and officials across the board to actually engage in the conversation of what does access and impact, what will engage greater participation of communities of color in the capital markets. There's a lot to unpack inside of this conversation, but one of the things I think we all know that it's no one sector, no one individual, but it's going to take collective action and collective conversation for us to develop solutions and really, unpack and diagnose what is actually going to make a difference in communities. So with that being the case, we are planning to have this convening on October 22nd. And I hope that those of you who are online today will actually join us for that conversation. We've got additional research that's coming out this coming September that really it's entitled Bridging the Divide, based on the 3 waves of the Foundation's National Financial Capability Study that really looks at the differing racial and ethnic backgrounds and actually confirms that there are, persistent investment in racial and economic divide in our country. But one of the things that is, I think, important to share is that when controlling for the socio-demographic variables, that gap in owning investments and taxable accounts actually closes substantially. So that begins a place for us to examine and to look at where we can actually create solutions that are going to make a difference. And it gives us an opportunity to really pay attention to how we can have greater participation in the capital markets, recognizing that the health of the capital markets requires all of us to continue to participate.
Thanks so much, Rita. I just want to amplify what you said about, or what I heard at least is, really big opportunities, really big pieces of work take a lot of different parties coming together. And it sounds like you're going to be advancing that through this next conversation in the fall, as well as your ongoing research. Well, this is great. Let's actually get into the framework a little bit. And the piece of that I want to start with is the piece of access, right? And again, this is the pretty straightforward idea that you can have all the other ingredients, but if there aren't tools that really are available to you and are well suited to you, then of course you're not going to participate in those markets. And I'd really like on this one to turn to you, Treasurer Ma. In many ways, I feel like California has really been a leader on a whole portfolio, a whole range of different really concrete ways to open up access to investing in capital markets for all Californians, but I think especially for those who are historically and today underserved or have been excluded. So I'm hoping you might help us with some real examples in this case of policy examples of what access can look like in practice, why it's important, and maybe what you have learned in your work so far in trying to create tangible opportunities to open up investing to more people.
Thank you. Yeah, thank you, Tim. Thank you for this opportunity to participate. I was an Aspen Institute Rodell Fellow, 2009 cohort. So I thank the Aspen Institute and Tim. A couple things before I make some remarks. As Jalen said, about greater access. I really do think as a woman, a person of color, for the past 30 years, technology has really helped us as women to level the playing field, whether it is on social media and being able to tell our own story and what we're doing every day, because I don't think women are very good at patting ourselves on the back and stepping up and, puffing up our, our ego. And then second, COVID. This virtual reality has been a great leveler. Women tend to have constraints in terms of time and money. And the fact that we are now virtual and there are so many programs that are free where women don't have to get on a plane, spend 2 or 3 days or thousands of dollars to spend on a seminar or a conference has really made a difference. I've been really promoting more women on corporate boards, paying corporate boards. And it is a mystery how to get on a corporate board. And because of COVID, we've been able to do a number of free seminars, and hopefully that will also unlock opportunities for women and people of color. But here today, I'm here to talk about some of the things that government can do. And in California, we are the first state to pass a Cal Savers program. And that is really a program for any employee or employer who does not offer a savings account for their employees. Now in California, we have 2 major policy tools. We have a state mandate where anyone who employs over 5 employees, again, that doesn't offer a retirement savings plan, will have to facilitate uploading their employee roster to our Cal Savers account. And then our second major policy tool is automatic enrollment. So there is an opt-out feature, but putting people into a program where they can save it and forget it, I think is a key to long-term, retirement savings, being able to save a certain amount of money for a certain amount of years, either retirement or for a rainy day. So that is a program that we are very proud to lead, and now other states are also offering that program, because here in California, there's about 8 million workers who do not have access to a retirement savings program. And as like Rita said earlier, right, a lot of it is people want to invest. They want to save money. They just don't know how to do it. And this is a great way to enroll people. They're going to be empowered to pick their option in terms of which account they want to invest in. Is it an ESG account? Is it a long-term? Is it a short-term? Or our basic account when you start, and you will see your account grow. I also oversee 2 other savings programs. Many of you probably know ScholarShare 529. It's in every state, and it really encourages parents or grandparents to save for their next generation so they don't have to rely on high student debt. And I like to use the latte example. If you save 1 latte a day and put it into a ScholarShare 529, that's about $100 a month. Over 18 years at an assumed rate of return of about 6%, you can save up to $68,000 a year. And that's money that can go toward a child's college education, tuition and books, and also some housing. And then the third one is also a new program called Cal Able. If you've been diagnosed with a disability before the age of 26 years old, you can now save up to $15,000 in that person's name without jeopardizing other health and safety benefits. The old maximum amount was $2,000. And having now a $15,000 cap per year really creates more independence and peace of mind for that person with a disability. We are working with Representative Cardenas and others in the legislature to expand the disability age of onset to 46 years old, because we understand that when you're an adult, sometimes you get into an accident or an illness, And you should also be able to create wealth by saving for retirement or a rainy day. So those are three ways that government is encouraging more access, expanding market participation, especially for low-income individuals, people who are just working every day, to provide access. And again, easy. It's easy, it's high quality, low fees, and they are managing their own accounts as well.
Thank you so much. I love the way you say that this is something that people, many people want. And if I heard you right, your role is really trying to help them get where they want to go. That really resonates deeply. And we just have to call out the power of 8 million people. That's an enormous population, and fantastic. Andre, I want to come to you as co-founder and CEO of a fintech of aspiration. I feel like you're probably living this access question really on a daily, weekly, hourly basis. But it also feels like important context to say that my sense is that you've had a long career with a through line of public service and thinking about the public good. And if you kind of bring both of those perspectives, I'd love to hear your thoughts on what should we be looking to entrepreneurs and to innovators. How do they play into this question of getting good quality tools available to everyone that are well suited to them, and what's the role of that being in part about the public good?
Yeah, well, I think where it starts for me is that we can be doing better than where we are, and we know this because we have. As the report shows, 55% of Americans have some sort of stock ownership. Rewind about 20 years ago, that number was 67%. And that number had grown through the 80s and through the 90s, not by accident, but by a series of decisions in the public sector as well as in the private sector. And we've pulled back from that as a society and really created this dynamic where you see a lot more bifurcation than was previously the case. And you see, of course, a lot more of a dynamic where a huge number of Americans just feel the avenues of wealth creation have been closed to them. And when you look at not just income inequality, but wealth inequality and how that has just grown by leaps and bounds over these past couple decades, it's not just those at the top reaching that escape velocity. It's not just the Jeff Bezoses and the people who make billions of dollars during the time that we're going to be spending on this conversation, perhaps. But it's that we've also been losing huge chunks of our population in our country to wealth creation and to believing that is part of what they can be thinking about and part of what their family can be thinking about as they grow into the future. There's a lot of conversation often about the Henrys, the high income, not rich yet population. And that's great, but what we often lose sight of is Alice. And I think that's who this report is shining a light on. And that's the people who are asset limited, income constrained, and employed. People who have jobs, people who are able to put food on the table, and yet feel like the gap of being able to grow wealth is getting bigger and bigger. Part of that is because of resources. Part of that is because of the large part of our population in America that is living paycheck to paycheck, that is really believing that, with a lot of factual basis, that they're just making ends meet. And the people who are sitting up awake at night worried about what happens if one thing goes wrong, and they're that close to not being able to buy food for the family or not be able to pay the rent. If the treasurer asks a question, I have to answer immediately. So it's a asset limited, income constrained, employed. But why is that? Yes, it's resources. Of course, it is that question of having that extra money for that latte and whatever else it means. It is about that investor identity, but it's also about access. And access isn't just about opening up the opportunities for investment and wealth creation, but it's opening up the belief that is part of what somebody wants to do. There's been in part because of fintech, a enormous investment and enormous success in lowering the barriers for participation in the investment economy. You've seen the per trade fees go from $10 to now $0 trades, $0 trades. Minimum has come way down to being $1, $10, whatever else might be. And yet that hasn't translated into greater participation in the wealth creating economy. To me, the biggest part of that is because of trust and the lack thereof. We have, in that same time period since the early 2000s, seen an enormous increase in active distrust of financial institutions. People who are believing that the financial industry isn't on their side. Less than 10% of Americans, according to one study, believe that their own financial institution is looking out for their best interests. And when people don't have that confidence, when people believe that their bank and the other parts of their financial infrastructure are not working for them, then they're not going to participate even if you lower minimums. And so that's where the intersection between private sector businesses that are earning customers' trust and the public sector, whether it's what happens in Washington or what happens in Sacramento or institutions like FINRA that are building trust and building the belief that people can have confidence in their financial institution are so important. Yes, that's going to be through regulation, but it's also going to be just through alignment of incentives and values. People don't believe that their bank is going to be looking out for them because in most cases, it's true that the bank does better when you do worse. If you're a bank and you're making your money on overdraft fees and late fees and service fees, then whether you act on it or not, your incentive is for customers to be racking up those fees. And until we change that dynamic and people have that confidence, I think you're going to continue to see a lot of people just believing that the financial industry isn't for them.
Thanks, Andre. I'm also monitoring the questions that all of you can see, and I just want to put out to the panel, when we get to, in a couple minutes, you all will have a chance to have some more comments. There are two that I think are right on point. I'll read this verbatim. How do we bring women and people of color to the driver's seat and helm of leveling the playing field compared to, quote, we will do this for them? That just seems really on point to the conversation. And I'm sure I'm missing many fabulous questions. There's only so much multitasking I can do, but somewhere else was a question about, is this really for all incomes? Are we really talking about a certain income? So I'm not going to ask you to respond now, but if you could just have that in mind when we get to the final round of questions. Yeah, Andre, I really appreciate your point. The timing is interesting, highlighting how many of us just don't have, really are up at night worrying about making ends meet the week after the expanded child tax credit payments have started to go out is really interesting. I don't want to overplay that's addressing longstanding systemic issues in a single sweep. But I personally wonder, and we've been doing work at Commonwealth, if that does create some opportunity for people who have, for too long, really realistically not seen opportunity. But my job is partly to keep us moving. So I want to turn the conversation to the part of the pillar of actionable knowledge. And, many of you, I'm sure, who are joining us today have this experience. You can't talk about anything in the neighborhood of financial empowerment or certainly opening up access to new financial products and services or capital markets without some point the conversation being, well, isn't this really just about financial education? And to be honest, I mean, we as an organization and speaking personally, we have a little bit of a negative reaction to that if it implies that basically each of us as individuals can solve this situation we find ourselves in entirely on our own, that feels wrong, or that really what we're talking about is some kind of deficit in the individual. If you just knew enough, then you would be able. So, but one of the things that was really surprising and I really enjoyed in reading the work and the interviews was that there's another frame out there, which is that access to knowledge about investing is sometimes an exclusive club. It's sort of like, it's like I'm being held, like somebody has got some knowledge that I should have access to. And it's almost a desire and a craving to have access to the same kinds of information maybe that other people who are much better connected in society, say, have. And so I think this is a rich, there's a lot of preamble, but Rita, I want to come to you because I know that the FINRA Foundation has spent years thinking about investor education, and my sense is you all have been on your own journey in thinking about where this issue of knowledge or education fits into the work and how to frame it constructively. And so is there anything you want to weigh in on this question of financial education, where it fits? You're on mute there.
I definitely do, just in terms of, thinking about, this notion of, and I think you pointed it out quite clearly, that education is never a deficit, and that there is definitely a desire and a need for many individuals to understand how the markets work. And of course, when there's symmetry of information, when everyone knows how it works, then one, we have market efficiencies, we have greater market access. But part of it actually begins in recognizing that so much of what may be considered the insider knowledge is, in fact, it's jargon. That it's recognizing that people need information that's consumed in a way that is, for just-in-time decision making. And that's something that becomes really important when we think about what financial knowledge needs to look like, and recognizing and with that information, the importance of being able to have financial acumen, to be able to take actions to make informed decisions. And inside of that, I think it's important for us to recognize just overall that a third of Americans can actually answer questions related, at least to the 5 of the 10 investing questions correctly in terms of the big 5. We had actually done at the FINRA Foundation in 2019 as part of our financial capability study, we took a look at, what is the substantial amount of financial education that actually has impact. And what we found is that, that for the most part, when people have participated in at least 10 hours or more financial education, they tend to exhibit more self-affirming financial behaviors than those that have not. When we look at the fact that nearly half of Americans, that's like 49%, have received more than 10 hours of financial education, they tend actually to spend less than they earn. And so there are lots of positive financial implications in terms of long-term outcomes when information is provided to individuals in a way that's accessible and that actually speaks to providing them information to make informed financial decisions. In this current landscape that we're in this time, I think it's important for us to also acknowledge that, families are grappling with a bewildering amount of financial decisions, and that the knowledge and the complexity has actually grown even significantly for people who are considered experts. And so when we have that as part of our context, we have to also recognize that so many individuals are now required to take greater responsibility in terms of managing their financial well-being. And that complexity is also in terms of the tools and the resources for all of us to understand. So when we think about, financial literacy, investor education, we really have to begin to think about how do we make that information even more accessible, such that people can make informed decisions and have access to that information that is free, that is unbiased. At the FINRA Foundation and at FINRA and our investor education, we've created a whole host of free resources that are unbiased. There's no sales pitch, it's just the facts. And I think it's important that we continue to look at, and as the treasurer mentioned in her the websites for the state of California, and having webinars and information available such that people can actually understand how to use money. We as young people, we learn a lot. It's one of the first things we learn about as young people, but understanding that there is that learning is something that is an ongoing process. And that, it's going to take something and a concerted effort across the board for all of us to continue to provide information, make it available to individuals all across this country.
Thanks. That is great. And just to stick with this question of financial education, I want to come to you, Treasurer Ma, across the Cal Savers program and 529 and ABLE you must have wrestled with this issue of how to deliver and offer constructive knowledge in a way that's respectful, and just want to see what we can learn from your experience.
Yeah, I think with all of the savings accounts, when you put an account in someone's name, it actually empowers them. And so one of your questions, right, how to bring women and people of color to the driver's seat versus having others make those decisions, that is very, very important. So I think having accounts in people's names are important. But I just want to say, you know, in my experience, you start when you're young. So I give out piggy banks to anyone who I can find, and I really encourage them to encourage their kids or their grandkids to save for a rainy day, because I think we have forgotten, you know, that saving mentality. You know, my parents, when we were born, they opened up an account for each one of us and put in a certain amount of money, invested in dividend reinvestment stocks. And by the time we went to college, we had enough money to go to college, buy a home after, use it for graduate school, or start a business. So parents can start early to save for young people, and that gives them a start in life. Also, you know, I think you need to educate yourself, right? There's a lot of free events and organizations like Rita and others have said, even if you Google just women financial literacy organizations, a whole bunch of them will pop up. And I think that's what helps us gain the confidence in, you know, this magical investment. You don't need to have you know, fancy degrees to be able to make money. And for those who are starting to save, put it in something that you cannot touch. I remember when I first started, I started putting it into CDs, because you have to keep your money in the CD so you're not tempted to take it out to go on vacation or, you know, pay off your credit card. Join an investment club. That's also a great way for others to share the knowledge and gain that experience. So I think there's just a lot of ways for people to just get started. That's free, that's easy, that is not intimidating.
Thank you. And I think actually that's a good segue into the last piece of the framework that I really want to spend a couple of minutes on, which is this concept that I think you were alluding to, Treasurer Ma, sort of how do you see yourself as an investor potentially? And then crucially, it's not just that, it's how do the institutions around you see you potentially as an investor? And we certainly have seen over and over again in our work, low-income people generally, low-income women of color say, a lot of different signs say, not for you here. And that is, you know, that just seems really important in this conversation. And so to take, I want to come to you and just say, you know, how important, based on your varied experience, how important is it to see yourself and to be seen as a prospective investor? And what are the barriers to enabling that more broadly? And especially given our audience today, what are things that leaders can do to foster that much broader sense of who can, perhaps should be an investor or have the opportunity to invest if they want to?
Well, it's incredibly important for us to recognize, yes, there are many external barriers to entry, but there are also self barriers. And I think there are a couple of things here. It's important for us overall as individuals, regardless of who you are, to get out of our own way. And it's important for us to rethink or reimagine what we were taught about our relationship with money and wealth. The reality is that, you know, for many in this country, money and wealth and the relationship to money and wealth has never been one that has been positive. And therefore, if once you become an adult, when it appears that you are gravitating towards wealth or money, sometimes it often does not feel positive because you've had such a negative experience with money and wealth growing up. And so it's very important for us to, you know, to really deal with that. Like for some people, it's trauma. For others, it's just not a good feeling. So we have to ourselves re-examine our own relationship and approach with money and wealth in itself. I think it's also equally important to make sure that we're demystifying this. It's all of this terminology, this language, these structures. We have to demystify it for ourselves. And as Treasurer Ma said, you know, I often tell my friends all the time, they'll ask me a question. I'll say, Google, she's always open. You know, she never closes and she's always open. And so we can also just there's a lot of free information out there, but it's important for those that are putting the information out to ensure that it's demystified, and for us to just sort of get out of our own way and say, we can be in there. 3 other quick points that I want to make. I think it's important, and we've had this conversation about expanding accessibility. And as Treasurer Mar mentioned earlier, technology has allowed us to have greater access, but it's important for the barrier to entry to continue to be lowered and lowered and lowered, whether it's fees, accessibility, what it takes, whether or not you need to be accredited or not accredited, what that accreditation process looks like. All of that, we need to continue to lower the barrier of entry. Number 3, I think it's also important to rethink as an industry what it means to invest. Totally rethink and iterate and be creative and innovative about what it takes to actually invest. I think we know historically, particularly amongst Black women, there have been culturally opportunities where Black women have come together to pool resources together. Historically, if we look at historical pools, whether it's in the Caribbean or on the continent of Africa, where pooling has been a cultural way of coming together. And those are ways that we can actually invest. And maybe I may not individually have an extra $30,000, but I may have $5,000 that I may pool with 5 of my friends who are each, they are also interested, and then we together can make investments. And the last thing that I will say is that it is very difficult to be what it is that you cannot see. So it's also important for us to ensure that we are elevating women of color who are investing, who are investors, and elevating them in the public sphere. We need to see them. We need to hear from them. We need to hear from them their best practices and hear their stories of how they took, you know, $100 and took that $100 and grew that $100 to 1,000, and that 1,000 to 10,000, and that 10,000 to 100,000, and now they're building wealth for themselves. And there are movements like I Am an Investor that was started by Macy Peterson, philanthropist, who is an entrepreneur, who started this movement to say, I want to show the world that I am an investor, that investors look like me, a young Black woman who was an entrepreneur
I think that
We're losing again.
Joteka, there's some thunderstorms. It sounds like might be. We're going to let you come back and get your final word in a minute. Because Emmy, is there an ability to cut her? There we go. All right, bear with us a moment, folks.
Model of thinking about how to make it make sense. I think ultimately it is also making sure that I think.
All right, well, I hope that, there you're back, Joteka. We'll give you another.
I apologize. I have no idea what's going on. It's like the internet will not let me, Zoom will not let me be great today, but I think you all.
No, that was great. And we're going to come back to it one more time if we can. So let me just, I want to pick up on something that I heard, I think, in what you said, which is very interesting. And which is in the way I would say it is, we have observed that if anything, marginalized, underserved communities, if anything, tend to be even more focused on how their choices reflect their values. And I think that is an area of opportunity, frankly. And Andre, I want to come to you on this because my perception is that one of the attributes of aspiration is you've really built that's really sort of what you've tried to do, is say we can create a tool and a platform that allows people to live their financial values in their choice of financial provider. And this starts to touch a little bit on ESG and much broader movements that are deliberate about saying our choice of where to deploy our dollars, is meaningful on many levels. And so I just wanted to see what you have learned about that, and if you see any opportunities as we think about opening up access to capital markets to populations who haven't necessarily had that opportunity before. Is there something about living your financial values that we can mine?
I think for a lot of people it is, and it's, for what we have seen, is all kinds of important reasons to think about how businesses are treating their employees and the environment and so on. And we at least have seen, and many others have seen, that those businesses tend to do better over time. Since FINRA is on, not always, but sometimes. But I think it really, along with just being a great, in our mind, way to invest, it's also about opening up the community of those who want to invest, and those, again, who are going to be excited about it. I think what we've tried to do at Aspiration is really two things. One is really thinking about how do we present investing to people. When our customers sign up, 75% or so have never made an investment in their lives, right? They are part of that 45% or so of the country that has no stocks, no ownership. And within the first year, a big chunk of them, 30+% of our customers, will make an investment. I think it's partly because we build it around values. We build it around not just here's a way to make money, but here's a way to make a positive impact too. But I think we also make it more accessible in terms of reaching people. And I think we're probably running out of time, but what we've tried to do is a very different approach around financial education, where we've really moved away from traditional financial education and seen that as oftentimes really broken and an inhibitor for action. But maybe that's a question for another time.
No, I appreciate we are running up to time, but I hear in your comments there's opportunity here to rethink things, and that resonates deeply. We are coming to the end, I promised, and I'm really excited to do a quick lightning round at the end. Speaking for Commonwealth, and I think also for Aspen, we're very focused on this work in real action, and part of that is talking to leaders about what they can do concretely. So let's do a very lightning round. I'll come to you first, Rita. What's one takeaway that you hope this audience will leave with that they could deploy in their work?
One takeaway: keep looking for what's needed, what's wanted, what's missing. Important. Keep asking the questions. Unpack our assumptions and our judgments.
Love it. Thank you. Treasurer Ma.
I think, you asked how to lead, right? For people like us, it's about information, sharing resources. That, I think, is our obligation. And for people who are interested, you need to ask us. We cannot read your minds. There's no dumb question. So please ask us. We want to be there to help.
Perfect. Andre?
I'd say that navigating the path to wealth creation can't be put only on individuals' shoulders. We can't tell them that they have to go consult a financial advisor, or we can't present things to them in a language of jargon. We can't tell them that they have to figure out what a PE ratio is before they can start investing. If we do that and continue to do that, which we have been doing as a society, we are going to continue to be pushing a huge chunk of our population as a country out of the world of wealth creation. We need to make products, and we need to make a system such that people can have the confidence to start that journey without having to know the ins and outs of how the financial system works.
Love that. All right, Choteka, I'm going to give you the last word.
I would just say the biggest takeaway is just to start. Just to start. Take the first step, and never let even a bad connection keep you from your destination.
So we're going to need to leave it there. I want to say a huge thank you to this panel, and just say that you all are a sign to me of the richness of possibility here across sectors, across races, across genders, across industries. We're all thinking about this and have a role to play. Huge thank you again to the Aspen Institute for hosting us today, and the incredible team here at Commonwealth, at Aspen, and also at NASDAQ. Emmy, do we have a slide with some resources we can throw up? Okay, very quickly, some of the things that have been referenced, we're going to put on screen if we can. But I will say the conversation in the chat, I couldn't keep up with, but incredibly rich. So I hope you all have been able to enjoy each other's questions, even if we haven't been able to address them all today. Thank you. The work continues. I know that's true for Commonwealth. I believe it is for the other people on the panel and Aspen as well. We want to hear from you with feedback and those opportunities to work together. And with that, thank you for spending the time with us today. Take care.
Thank you. Thank you.